Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Bryan Courchesne, founder of DAIM, which is a successful asset manager of cryptocurrencies and traditional investments, uniquely positioned to work with companies and individuals to provide the needed expertise, research, and strategies on a balanced portfolio of traditional investments and digital assets to optimize returns for its clients. Bryan, thank you so much for joining the show. I'm so excited to dive into your background, your experience. We also have some shared experience being in New York and moving to different places. We talked about the weather before the show and the adjustments there, but really excited to dive into what you're working on at DAIM, what got you to the position you're in now, and what you're excited about in the future. But before we get into all of that, what were you doing before you started DAIM?
Yeah, Julian, thanks for having me. I'm excited to do this. So before DAIM, I was doing something completely different. My life was the direct opposite of being CEO and running DAIM. I went to school at the University of Florida and I graduated. I ended up working for my family's concrete business. So in the construction industry. So, the first couple of weeks out of school, even though I had a degree, I was digging ditches, and then I moved up and I was doing some carpentry, and then I moved up a little bit more and I was pouring concrete. And then I did that for some years and I ended up becoming a general contractor, a licensed general contractor. And I had connected with an investor and we started building luxury homes in Delray Beach, Florida, between the intercoastal and the ocean. So, back in time, let's say this was 2005 and 2006, everything was great. And then 2008 happened, right? The whole housing market just collapsed.
Yeah. Yeah.
So at that time, I was basically living like the movie, The Big Short, you could say.
Yeah.
It was great. It was great.
I
Yeah.
love that. I love that. Was that experience kind of, built kind of growing from the ground up at your family business? What did that teach you that kind of, I guess, translates to DAIM? And it seems like during that experience, you still had what they say, initiative, right? Where you're just learning and growing and expanding in this investor relationship. And then you continued on. What did you learn from that experience? And also, have you always been the type to just take on more?
Yeah. So what I learned about that I took from the construction industry was that if you've ever seen when they were paper blueprints for a building, it's this massive stack of papers, very thick. And then it usually comes with a manual as well that could be 500 or 1,000 pages. And when you go to put something together, you have to read everything. You have to put everything together and you have to do it the right way with quality as well, because this building needs to withstand and it's got to support people that are going to be, working or living inside.
Yeah.
So, the diligence process, then I carried over to scheduling, efficiencies, quality of work, and then also, the ability to deep dive. And that's what kind of, gave me some insights to actually transition and to come to this business. But there was a few more stops along the way that we'll get into.
Yeah. Yeah. How did the investor relationship start? I think a lot of people are always hesitant or asking, how do I get involved? I always say, you just kind of got to take the opportunities that are in front of you and run with them, because those often lead to something else. But what kind of, I guess, motivated you to, get in touch with this investor and start working with him on something that maybe at the time you didn't feel, the most expertise in, but you thought, I think I could give it a shot and maybe I'm the one to learn and do something with it.
That's really it. So I wanted to grow and become a licensed general contractor, which was elevated from just pouring concrete. And when I got the license, now you got to use it. And how are you going to market yourself out there? Yeah. Pre-social media and stuff like that. So you got to tell your story. So network and around in the church I was going to at the time, you need to kind of meet with some people outside. And I had known this guy's son through doing some sports, and I updated him on what I was doing and how I'd become. And he's like, okay, well, I got a project coming up, and I was like, I'd love a shot to bid for it. I want to do this for you. You're going to get my undivided attention.
Yeah. Yeah.
And a little bit too, the economy was ripping at that time and it was kind of hard to get contractors, but he understood and he could see the way I presented myself that I was going to take care of him and do this. And it worked out. Yeah. We started off and it went great. Unfortunately, he also died of a random heart attack at the same time of the housing collapse. So it made things challenging for me.
Yeah. Yeah. What would you say led you to have that mentality? I think there's a lot of young entrepreneurs that, we read books, we think about different speakers and, whether it's biographies, autobiographies, different, pieces of information that we want to use. But I think implementing that is the difficult part. Is there anything that helped you implement that motivation or that mentality of, presenting yourself in a certain way?
Yeah. when I was much younger and playing sports, I wasn't the best, but I was one of the biggest. I mean, I'm still now, I'm 6'3", 200 pounds. So like, I'm a fit guy, even when I was younger and coming up. So like my frame didn't match the skills necessarily. So, I wanted to be better. And I just took motivation from like some magazines, watching sports figures, professional athletes, and just started like building up this work ethic of like practicing. And then when I was graduating high school and I was going to get into college, I did not get accepted to University of Florida the first time. I was very determined to get accepted. And then my insides were like, you know what, I'm going to go there and make a case. So I told my mom to hop in the car. And 17, we drove up to University of Florida from Delray Beach. We drove up to University of Florida and I met with the admissions counselor and I made a case for why I should be accepted and I got accepted. And then once you get that, like the attempt with the success, you think you can do it on everything.
Yeah.
And that, you just keep rolling that. So I really suggest to people to start with a small win at anything. Even at a young age, teach your kids, like, here's an obstacle, tackle it, win, support, feel it, how exciting that is that you can do things and then just build on it and build on it.
Yeah. I mean, that's incredible advice. And it seems so easy, but it's not because it takes a little bit of courage, some bravery. And I think a lot of times it takes, minimizing the negative outcome, because oftentimes it's just, maybe a negative feeling or emotion. In reality, the positivity that you get from success is weighs much more than the fear of failure or just like the hesitation to fail. But kind of shifting gears here, once the recession hit, you said you relocated to New York, you worked with trading options in the pit of the exchange. Tell me about how that experience was, because it must have been just so challenging. I mean, the environment was so hostile, and you moved to a city that we talked about that has kind of no forgiveness, but has mounds of opportunity. Give us a little insight into how that experience kind of built your skill set and what that was like at the time.
Yeah. So I was almost like, I had to force change, right? So the housing market collapsed. I had to get rid of the truck, get rid of the jet skis. I had to rent the house, no more pool parties. And in that time, I had met these two guys that were working at Goldman Sachs, and they were equity derivatives traders. They were on the options desk specializing in options, and they were doing great. But I was still in Florida, not doing anything. And I could just feel like this pulse of energy, like coming down, like almost coming to Florida. And I wasn't doing anything. So I decided that I was going to move to New York and take a shot. And this was in October of 2009. And I was going to get a job as a trader. So I pack up my things. I rent a small little studio on the West Side. Being from Florida in New York City in October, I got surprised very quickly by the first, there was an early snowstorm. But I'm studying options during the day. I'm watching CNBC, Bloomberg, trying to just pick up anything I could. And I'm just waiting for the weekend and sometimes nights later on in the week to go out and meet these guys and to network as much as I can to try to get in the industry. So you meet people, you don't know nothing. And you hear people back at home, New York City is going to chew you up and spit you out. You're not going to make it 6 months. You hear all that stuff, but it keeps building inside, like to the point where I'm there. I have to make it work. Right.
Yeah.
And what ended up going down is I met a guy that had a seat on the floor of the New York Stock Exchange. I met him a few times and told him about me and what I was doing. And just like, didn't have his phone number, needed to connect him again, make the pitch again. I stood outside the New York Stock Exchange a couple of times in the morning in the snow, hoping to catch him coming in. And I ended up speaking to him and I told him, look, like, I became a licensed general contractor. I can do math. I know some engineering. I work hard. I know stuff. There's got to be something I can do to help you. So he said, all right, I'm going to give you a shot. So he gave me a seat in the back corner, writing paper tickets, backing up the traders that were on the floor to try to learn everything.
Yeah.
And it was, I had all the stuff I was reading during the day, it didn't equate to anything that was really going on down there.
Yeah.
It's completely foreign to any book ever written. But it was a really cool experience. It was boot camp. So then I went from writing paper tickets to filling in one day when they were shorthanded and executing some trades in the pit. And then you get the jacket, suit and tie to work, you have the badge, headset, you got the pads. So I was down there for 13 months. It was really cool experience. Yeah, it was pretty awesome.
Yeah. We always think, I mean, at least now, I think the Wolf of Wall Street shows movie is synonymous with people who think about stock exchange, especially during that time. We think about The Big Short, all these movies that, describe a story and experience, through the transition of the Great Recession and through these big time periods where the economy was, going through ebbs and flows, volatility and not, where is it now? Like, where is the, you sent me a keyword earlier. You talked about the end of the Wolf of Wall Street. What is that? What do you mean by that? What does that define? Is that defining a time period or a transition in thought? Can you describe that a little bit more?
Yeah. For me, it was just like, kind of like the movie narrative. I went there, I started something.
Yeah.
Like he did.
Yeah.
Jordan Belfort, right?
Yes.
And I'm going to preface this out right now. I was living a compliant, cleaner version of that movie. But yeah, some of my buddies back at home were like, they would make the jokes and say that stuff because when I got there, there was still a lot of action on the floor. There was just great things to do and network and events to go to, and everything was busy. And my wife now was a singer-songwriter and model. So there was a lot of cool things to do and party. And it was a really, really cool life. And then, later on, you got to kind of transition again.
Yeah.
So things go.
Yeah. Now, is that transition, I know, I think I was reading your bios back in 2013, you started really digging deeper into cryptocurrency and Bitcoin. And a lot of people, I feel like there was very select few people that were really diving into the technology behind that and what that meant and how it was going to actually progress. What was your experience learning it, and what kind of cued your curiosity towards cryptocurrency and Bitcoin to now obviously run a company that works with managing those assets? But what was in that time, if you can think back, what cued your attention to that?
It's interesting, Julian, because now at the age of Bitcoin at 13 years old and the age of my business, I haven't had to tell that story in a while. So we'll dive into it a little bit. So things in Europe were a little transitory. Every 2 years you kind of move and do stuff. But I was running a desk of sales traders, and then I moved to another firm. And then I was looking at my PA one day, my personal account, and I was like, okay, I want to diversify the portfolio. I want something alternative that's liquid, that's got high vol, because if you're on the right side of the movement on something with high volatility, you can, have outperformance from, typical assets. I already had some real estate. It was a bit too illiquid, and I'd come across Bitcoin. So this was all self-research, reading about it. And what ended up happening was in 2014, towards the end of the year, our government announced that they were going to auction off Bitcoin from the Silk Road case, which ended up happening. And Barry Silbert ended up beating out Tim Draper. Barry Silbert's the CEO founder of Digital Currency Group, which is the parent company of Genesis. So at that moment, I was like, okay, our government's not going to, deem it illegal, anything. It's going to sell itself, right? So if they're going to sell it themselves, it's not illegal. And at that time, that was one of the bigger risk factors, was that it could become illegal besides the volatility of it.
Mm-hmm.
So that pushed me over the ledge. I said, okay, this is going to be around. It's going to be around forever. I'm going to invest this. And then there was like an ancillary point where there was a guy from one of the other trading desks at my firm. This guy was typically wrong, and he had an accent. He was from over the ocean, but he saw me reading about it one day, and he's like, "Oh, I have some of those. They're terrible. They gotta go down. I don't want anything to do with those things." And so I'm reading the same article, right? Like reading about the launch of the Silk Road. And I'm like, this is it. We're gonna make an allocation, and we're gonna get long. That was October 2014.
Wow. And so what made you transition to DAIM and starting your own thing? And what was the, I guess, I feel like a lot of founders, when they talk about this transition into running a company and kind of proving out, it's almost like proving out a concept or an idea or a hypothesis that they have. What was the hypothesis at the time, and what motivated you to kind of take it and run with it?
So I get invested, and you talk to your friends, tell them you did, try to get them, you try to orange pill that, get them going. No one wants to do it. But over the next few years, people knew I had a position. So there was an increase in the amount of inquiries I was getting.
Yeah.
What are they? How do I buy some? Where do I trade them? How do I custody? What is this token? What's that ICO? So there was an increase, right, in questions. And it was coming from sophisticated investors too. Guys more aligned with TradFi. So in 2017, at the current firm I was at, it was being bought out by a large bank, and I had the opportunity to pivot out.
Mm-hmm.
And at the same time, my wife Heidi had just had our son, Luke. He was 3 months old. And I'm sitting there going, all right, like if I'm going to add risk it's now. While I'm
Yeah.
younger, I got the family, we can move, we can pivot. Doing this later when he's in school or I'm locked in more, it's just not going to work. So I said, this is the time. I want to be in control of a business. This is what's needed. I know it in my background. We're going to take a shot. So we moved out of New York City and came over to beautiful Newport Beach, which is a little finance hub over here. And this is where I wanted to build DAIM.
Yeah. Where is DAIM now? Where do you see it's like, you're investing in cryptocurrencies and Bitcoin in particular, other digital assets as well. I know you incorporate a lot of traditional investments as well. Where are you now, and what's kind of getting you excited about continuing the growth of DAIM?
Yeah, it's probably worth shedding a little light, for behind company lines about what it took to get here, because that was another struggle all in itself. And on your podcast, you'll look back in history, or you can cut snips, whatever a founder says about how difficult it is, how much money it takes, double, triple, how much time it takes, twice as long, three times as long is all true.
Yeah.
There's hurdles you can't even think of that pop up. So basically, we're licensed as a registered investment advisor, which is an RIA. Typical RIAs are advisors of stocks, equities, fixed income products, bonds, and life insurance. And that's what's all out there. But we decided that for the investors I was getting questions by and the pulse I could feel, there needed to be a licensed investment advisor and asset manager who could properly help people get into the space, help them with, sizing of their positions, risk tolerance, what tokens, manage a portfolio. So we decided that we're going to submit the registration. And if they tell us, no, we don't want to do it right away, okay, that's it. I'm going on to a different business plan.
Yeah.
But if they wanted to explore it, we would go down that road. So submitted the application for an RIA. Ours was very different because it was all just for cryptocurrencies.
Yeah.
And they said, okay, we're going to ask you a few questions in a couple of weeks. That was like the best thing that happened.
Yeah.
That time. And from then on, it was just months and months of educating the examiner on what digital assets are, how they trade, custody, building a large list of potential risk that could happen. Some of the stuff was that they didn't quite understand that there's you don't need a broker dealer in the middle. Like a retail customer can go direct to exchange and acquire the asset. So basically we did this exercise and going back and forth with them. But meanwhile, Bitcoin had started in 2018. It was at 13,500. Okay.
Yeah.
And during the application process, it's sliding down. Now we're in May and it's trading 9,000. And I could tell the regulators are kind of getting wet, a little squirmy. And out of nowhere, they just email me look, we don't want to license the first of its kind investment advisor for crypto. I'm like, oh, you guys could have told me that a long time ago. I had to sell all these Bitcoin to fund this party in the life over here. But, I wasn't going to take no for an answer. And this comes from what's inside and the story I told you, a bit ago that stems from University of Florida all the way to moving to New York City. I wasn't going to let go. So I got a guy that tried to do some lobbying for me that didn't materialize. And then we almost moved and didn't do that because there's a lesson I learned at a young age, which was don't ever think you can move from your problems. They're just going to follow you. You've got to take them head on and you've got to fix it and you've got to find a way, because if that's what you believe, it's going to work out, but don't ever try to run.
Yeah. Yeah. What, a lot of founders talk about these periods of time where, they kind of think about, they have some kind of good news or optimistic outcome and then are hit with something that it's almost stunts or halts their growth and potential. What did you do in that time? What was like your strategy? You said some guy tried to lobby for you. What is one, how'd you back up and kind of re-examine your situation? And then two, how did you use what you had, tools, people, network, I'm not sure what else, but, whether it's favors or anything, but what did you use to get through that process and something that maybe other founders can use to get through their hurdles if they're seeing something that's as stalling as that situation was?
Yeah. I'll tell you that not many people are going to do something for you when you reach out. Really, if you want to get great things done, you need a great team, but it's got to come from inside you and you got to get it done. You got to go out there and push it. Right. So like I said, with the guy that tried to do some lobbying that didn't materialize, he had low energy for it. He gave a little huck and went away. And now I knew I had to take it into my own hands again, right? And make the case. So even though the price of Bitcoin was coming down, the ICOs were just like, it was just scams, risk, hacks, frauds, everything was going on. And I looked at it and I said, okay, I'm going to make a case because I'm actually the most qualified to do this and open this business. So I went back to the examiner and I said, let's have a meeting. I got to tell you why this is needed. And I leaned into the problem that the market was going down, that there was, people were losing money across the street. And I said, look, I have the Series 24, which is a compliance officer. I had the Series 4, which is an options principal. So I understand volatility. I have the Series 65, which allows me to advise and manage for clients. So I understand how to speak to them, risk tolerance. And I've been in the space since October 2014. So I understand the asset and the history. The history is very important to understand in this space. And I said, you need somebody like us because their citizens here are just, they're losing money. They have no one to help them. Everything is self-directed that's out there. And the next day we got the license. It came in, I saw it in the inbox, and that was another big victory, but just for that day, because there was more hurdles that came.
Yeah. Yeah. I love the idea of leaning into the problem, because I think a lot of people, even founders included, try to continue to highlight the optimism of their market or their product or their service, rather than exposing the truth into what they're facing and offering their strategy as a solution, which I think is compelling to the right people, or the people that believe in your product or what you're doing. How has I was curious because I don't come from a finance background. I run a services company, but which I know yours is as well. But you have a very kind of fine-tuned expertise in asset management. How has it changed since 2014, particularly in cryptocurrency, with the different upgrades in technology, adoption of crypto and Bitcoin and other coins now coming to fruition and being more complex and people building on it? How has this changed the way you manage this asset class?
Yeah. So this is unique. Really, Coinbase was around in like the first ones that were like the on-ramps in October 2014. It was really hard to link a bank to any kind of platform to get US dollars onto a platform to own stuff. And now where we are in time, there's many, many on-ramps. It's pretty conventional to get assets on board. But there's a couple things about that. One, most people feel comfortable with a few $1,000, maybe 10 grand. If they put more than that on Coinbase without somebody helping them, they're kind of reserved. But sophisticated investors, guys that are in tune, if their profile suggests that they could allocate 6 figures, 500 grand to the space, they want to do it through something that's more conventional, something that looks like TradFi, right? And that's still needed. That space is, we're still very few of us in the space that do this, that offer this kind of service. So on our end, the asset management side still looks a bit like traditional finance, the way we onboard and take on clients, the way we go through risk disclosures, client suitability. And then on the asset management side, that's going, the platforms underneath are always evolving. So that's one part of the business where you got to stay in tune to continuously stay at the forefront, upgrade, look at what investments are out there, try to stay away from things that are bad. We do testing ourselves with our own money before we ever do any investments. That way, if something goes wrong, it's on us first before we ever, make a recommendation or do what the client accounts.
Yeah,
but I'll say on one side, the on-ramps are there. It's easy for small accounts, but when you want to do complex things, IRAs, 401ks, trusts, or you want to do larger amounts, having a business like mine is the platform you want to go through to get this done.
Yeah. What are some of the downfalls of, kind of, I don't know if it's the average investor or the typical investor who maybe doesn't partner with a DAIM or, kind of is a self-expert that tries to work within this space. What are some of the common mistakes that they make that maybe you all either have seen before, have expertise in, or have done and have experience with that kind of give you a step ahead?
There's a lot, and they still pop up. And I think they will continue to, because the space evolves rapidly, especially in the DeFi notion. So in the beginning, it was, hey, I want to do this in a tax advantage account. How do I do it? We have that expertise. We can put pure digital assets in something like a Roth IRA to get the tax advantages where you don't pay taxes on gains inside the account, and you also don't pay taxes at time of distribution. So it's kind of like God's gift to the account. So we do that kind of stuff for clients. Other rescues are whenever an exchange goes out and like lack of service, because there's a lot of activity, it usually turns off a bulk of people who now want out, because that fear of like, I'm not able to touch my assets makes them want to leave and come to a place where, like us, with our partners in the background, we have the ability to talk to humans on these platforms. So again, the crypto space is very self-directed, no phone numbers. Nobody wants to talk to anybody. They just want you to get in and trade. But in reality, we're here as humans, so we can go into things. And then Robinhood, for example, you don't actually own pure tokens. Well, they're trying to work on that now to when you transfer out. So people found that out. GBTC, going from a premium now to it's at a discount. But before, when it was coming down, we were trying to help clients move out of that. Things like impermanent loss on DeFi platforms. Yeah, these are things that we see and we'll continue to see.
Yeah. I hear a lot of the idea around balanced portfolios, and a lot of times the answers to that question, what is a balanced portfolio, is having a lot of different skin in the game with different asset classes, whether, like you mentioned earlier, with your own personal portfolio, real estate, traditional investments, and then cryptocurrencies and Bitcoin and all the tokens underneath that umbrella. How would you define, in your words and in your experience, what a balanced portfolio is at, people who, and how would you segment them amongst the different types of investors out there?
Right. So the 60-40 portfolio, if headlines being shown recently, is not looking good right now. Right. And in retirement, it's probably going to show that retirees are going to be underfunded that are in a 60-40 portfolio. 60-40 portfolio, in the underlying tone, wants to be rebalanced to maintain that ratio. Rebalancing incurs trades, which helps fees for bigger banks, right? Mm-hmm. So we start to step aside from that and back up. And we look at our clients along the age spectrum and income spectrum. So younger, higher income can handle more risk and have a larger portion in cryptocurrencies. On the other end of the spectrum, retirees, 80 plus, no job. If they come in wanting 100% in crypto to get the moonshot, we can't take them. We got to walk them down. We got to walk them down drastically in that part. And then from there, balancing out the portfolio. A lot of people, understand now to have alternatives outside of crypto, real estate, and then also along to complement stocks and some fixed income stuff. So really, we just slide along that spectrum.
Yeah. Thinking about DAIM and where you are now and where you got to this point, tell us a little bit about your traction, what companies, what individuals you're working with, and what you're excited about in the near future, and with what you've built, but also what you continue to building, and maybe new directions that you're hoping to go.
Yeah. So now the business is licensed, right? And I'll tell you about the traction. We had to start with 0 AUM. So that's May. Now the price of Bitcoin goes down about another 30%. It's at 6,500 in August of 2018. Okay. Then I'm pitching friends and family, and, get about going to 2019 and we get about 20 accounts. Right. And things are kind of bleak and, still running around trying to get marketing, and Google doesn't want to allow us to advertise. Facebook doesn't want us to advertise. They shut it off when things are bad. And then when things are going well for a while, they turn on advertising again and they help pump things that shouldn't be pumped. So I'm fighting against the curve. And then we enter 2020, and everybody knows there was COVID, and people were able to do more research on themselves now that they're at home working, right? They were able to look at investments and really do due diligence, and they became more open to alternative investments. Okay. So we had that behind us. And then it was the Bitcoin halving in that summer of the block reward. And Ethereum had announced, the outline to change to proof of stake. Yeah. So we built a narrative and we ran with that and caught some tailwinds to the point now where we have 210 client accounts that are all separately managed. We have a 401k business with the option to add pure Bitcoin into it that's growing. Things are great. And then we're launching a new product to the blended portfolio, which I'll tell you about in a little bit.
Yeah. What are some of the biggest risks that DAIM faces today?
Yeah. So I think there's three. There's regulatory, there's taxation, and then there's investment. On the regulatory side, you do hear a lot of people saying, crypto should be regulated. To us, it's pretty clear on what's happening and what's going down. What could come from the regulators is additional licensing required for firms that want to interact with individuals in the space, kind of like the BIT license. And I foresee if that happens in California or in the United States, that we'll apply and we'll comply, and then we'll get the license there. So I see that being small. And then there's the taxation side, where if our government was to put a special tax on crypto individually or on firms that deal in crypto, that could be a bit punitive, but I really don't see that happening. The board of accountants really came out and said recently that, it's short-term, long-term gains. You got to report this stuff and what you want to do. And then the other one's investment risk. So this is a bit of a black swan. So Satoshi Nakamoto, the anonymous creator of Bitcoin, who released 21 million units, has 1 million units of Bitcoin. You can't look in one wallet and see all those. They're actually broken apart into 22,000 wallets, which is really smart. But should any of those Bitcoin be transferred out to an exchange, that would kind of ruin the belief system and what's going on. That means somebody's behind it. At this day, there's 19 billion of worth of those. So if they wanted to tap into them, there's plenty of opportunity in the past 13 years to do that. You have to wait till it gets this big. And what really shows is statistically is the longer that those coins don't move, the higher the probability is that they won't move in the future. So we see this as a diminishing risk, small basis points.
Yeah. Yeah. What if everything goes well? What's the long-term vision for DAIM?
So I have a great independent CEO advisor. His name's Mark Hartzell. You guys can look him up. Highly recommended. So he advised me to build a month-by-month plan that goes out 24 months. And then it goes out 30 years with some milestones on the way. And when I look at this, it really opens my eyes to what I got to do to drive this business to hit the vision. So what we want to do is we want to add 4 to 6 more companies to our 401k plan. And our 401k plan is really unique. In it, one of the portfolio options for the employees is to have 10% in pure Bitcoin and then 90% along the suite of Vanguard mutual funds. And it really just ups the return metrics, Sharpe ratios, Sorrentino ratios. And like I said, the 60-40 portfolio is likely going to be underfunded at retirement. This helps attempt to better fund at retirement by adding pure Bitcoin, even with the drawdowns. And then we have our conventional model portfolio that has a 4-year track record. That's doing really well. Its total return over that time is 266% versus Bitcoin alone, which is 158. So we do have outperformance there. And like on a unit of Bitcoin basis, that's like a 42% increase in units of Bitcoin. So we want to keep that going, keep adding clients to that and adhering to that track record. And then we got one more. We got our new blended portfolio, which is one portfolio to get a mix of equities and crypto. So this portfolio is for qualified investors. It encompasses 2,000 small cap stocks, the top 100 NASDAQ stocks, take out the financials, and then we put in our crypto model portfolio, the one that has the 266% return. And if you look at some historical modeling going back to 2011, that portfolio would have a 16x return on it.
Wow. Wow. And it just, one for, I guess, a selfish question, but also for our audience as well. If you are kind of on the fringe, you're working on a project, but you're investing kind of on the side, what is your advice to helping someone get their portfolio to a position where, and it sounds like anyone could work with DAIM at this point, but I think other people can be more strongly equipped to partner with a company like yours to even take advantage of the strategies that you employ. What can we do to get ourselves to the point to work with DAIM? And then where can DAIM kind of help an individual like myself or other founders really see returns on the money, the hard-earned money that we work on our ideas and that we spend time on? What can get us there?
So at DAIM, we can have any client. They don't just have to be qualified clients. So like a fund that's out there, most people have to be high net worth and meet like higher financial levels. Yeah. With DAIM, you could be, an entry person, and we help out a lot with qualified accounts. So those IRAs, traditional IRAs. So that's the service that we have out there. And it's good to put some money away in those. That way you have it for retirement, 59 and a half. And that's planning for your future better. One of the things I'd also say is be really careful with where you're getting your information from.
Yeah.
So YouTube, TikTok, a lot of talking heads out there, they're making money off you. But are they giving you the right advice? So really filter and so really be careful with where you're getting your influence from. A lot of talking heads on YouTube. Don't try to stretch too far to get outlandish returns.
Yeah.
A core position in Bitcoin is still great. Dollar cost average in, give yourself some time, make a long-term plan, know where a stop loss is if you can, and then just be patient. There's no need to rush into stuff. There's no need to day trade it. Day trading works. A lot of guys think they're miracle makers and fund managers when the market's going up. And then a lot of those guys are feeling the pain now.
Yeah. Yeah. I love the piece about understanding where your information is coming from, because, I've done the same. I've seen the YouTube clips. I've looked at the TikTok videos to see where we can allocate and invest. And so, but it seems, and I love that you kind of reiterated that the traditional ways that you invest and move your money, whether it's dollar cost averaging and kind of thinking about a long-term strategy, because just like when you make a business and create something that's, people are starting to buy, it takes time, and it takes time to adopt, whatever you're working on to have success. And it sounds like same with investment and management and with these assets. And is another question I'd like to ask, just so we make sure we cover all bases, is there anything that I didn't ask you that I should have?
It's inspiration, because we all need it, right? Like we're not like professional athletes where we have, a 6-month season and we have the off season and we get to recharge and come back with we got to do this day in and day out. So you need inspiration. And for some time now, it's been Ron Barron. So he of Barron Funds, the guy that started off with $1,000 and now manages over 45 billion. It took him a few decades to get there, but he does a great job. He typically holds things long, so 4 to 5 years. And something like Tesla, he's held even longer. And we're a bit similar in that, we're unconventional in the space where we hold things long too, sometimes a couple of years. This space really wants you to trade. It wants you to, like I said, the YouTubes and the TikToks, and that's all underlying pressure from the exchanges because they make money on the trades. But oftentimes this leads to losses for the individual. So we like being long, and our model portfolio showed that and its outperformance. And really my other influencers are the wife and kids at home. You look at them and you're like, wow, like I got hungry mouths to feed. They don't know the struggles, but you got to get this done. You got to make it happen and you got to get through any challenge. So they give me a lot of fuel.
Yeah. Thank you so much for sharing the inspirational piece. And I got to add that question to the deck, because I think a lot of founders, myself included, struggle when you just doing something long-term and having such a marathon of something that you're working on, because there's a lot of emotional strain that people don't necessarily understand, that, you have to be creative about the ways you reinvent or remotivate yourself or look at a problem time and time again, because there's a lot of cost to it. And it really takes, some self-reflection, some inspiration, motivation from other parties to get through that.
Yeah.
Another question I'd love to ask my founders as selfish research and for my audience, what books, and you mentioned some people already, so what books have influenced you the most, either now or in the past, in coming up in your entrepreneurial journey?
I like to say that I have a lot of time for books.
Yes.
and to read them. And it's really turned, like in small doses, like I just podcasts like yours have actually been a bit more like informational, motivating. Just one little tip that you could get from that, can just change a problem that you have. And now you have the solution. And it's just relating their problem to yours. Whereas, books are great. I'm not going to discount anything. I think everybody should read books and go in. It's just not something I do lately. And you got to multitask a lot when you're in the role that I am. Mm-hmm. And podcasts are definitely it. Yours is great. I was telling you about yours in the beginning. I definitely recommend everybody check it out. Like when you're running a business, like just hear these stories because it will help you through some of your problems. And I'm also a fan of the All In podcast with Shamal Hapatia and Jason Calcone. It's a great podcast talking about local markets, and it's a bit motivating too. Yeah, to push your business as they talk about VCs and how they run their business.
Yeah. I don't know if you're similar, but I love the little bits of information that just, those for me are motivating because it helps reinvigorate, trying something and trying it again in a different way, because nobody likes to, try the same solution and get stunted or see the similar growth. We all want to kind of interject some innovation in our daily lives and in our business to move past some hurdles. But Bryan, thank you so much. I know we're at time and we could talk time and time again with your experience and thank you for being so candid in your answers and your responses.
Of course. It's great to tell my story. I appreciate the medium.
Of course. Last little bit is, where can we support DAIM? Where are your LinkedIn's, your Twitters? Where can we be a part of the journey, the support, and also get more information about how your company really takes on, this new and innovative asset and class into a traditional investment approach?
Yep. So on Twitter, when you're sorting through and trying to figure out how, who to listen to, who not to listen to, you can find our company Twitter that's on there. So that's DAIM_IO. So Delta Alpha Indigo Mary _Indigo Oscar. So that's our handle there. And then it can connect back to me as a CEO, Bryan_Courchesne. The last name's hard to spell, but you'll find it when you link in. And then our website's also great too. If people still use those, it's a place to go. There's a little bit of education. You can get our Substack newsletter that's on there, and that's daim.io. So DAIM.io.
Awesome. Well, thank you so much, Bryan. I not only learned so much from your experience, but your expertise, and I can't wait to share this with my audience and give them some great soundbites of information, not only on investment and trading, but also what it takes to get through the challenges of building a business and how to view, the strategy on building and moving forward. So I really hope you enjoyed yourself, but thank you again for being
I did. All right. Thank you for letting me tell my story.
Of course.
Thank you, Julian. Bye, buddy.
Yeah.